Hello, everybody. Welcome to Friday. We did not have a show today, so I wanted to do a quick summary. Today was a pretty big day, actually, so a good day to record something and talk about what happened. The S&P 500 was down 2.7% today. We've been stretching this market up for a long time. It's priced for perfection. Valuations are very high, so it doesn't take a lot to get a pullback. And of course, today we had a threat by Trump to drastically increase the tariffs on China because China's still slow walking the rare earth metals, which is something we need in order to manufacture almost anything. Matter of fact, if they cut off the rare earth metals, we'd probably have a really big problem on our hands because they control roughly 90% of the processing of these metals. And it is something that the US is working quickly on and trying to find resources outside of China. But this is the big card that China has against us. So I feel like what's happening is that China has been going around kind of solidifying their, relationships with countries outside the U.S., their trade agreements and what have you, different meetings that we've seen happening. If you look at the numbers, actually China's exports are up for the year versus last year, even with all this issues and having less from the U.S. China's been getting ready for this trade war for decades and gathering, certain things that are very critical, that they can control, like these rare earth metals. And so, Trump has a style of trying to, be very aggressive. Of course, the market kind of reacts to that. I wouldn't be surprised, though, if next week we don't see a recovery just because, the whole market has been moving forward since Liberation Day on April 2nd, based on the fact that, in my opinion, that Trump will adjust if things go wrong. So, the fact that he's throwing out these bombs is not an unusual occurrence. I just think, it's heading into a Friday. We've got enough headwinds coming at us. People don't want to sit there at risk throughout the weekend and whatnot too. So there's a bit of a sell-off there. I think it was probably an overreaction. I'll bet you anything they kind of work this out as far as that goes. However, one of the things that is kind of going to be a big clash is that from the beginning, Trump has felt like we have the advantage over China because we're the biggest market in the world, even though China had moved down their exports to the U.S. since 2018 after that last, tariff run from roughly 22% to I think around 15%, and that's even lower now of their exports. And so they're not relying on the U.S. that much. And again, if you look at what's happened since this started, they're actually exporting more than they were. So they're probably feeling a bit confident about this, and they are trying to get the U.S. to lower the tariffs that they are having to pay to bring products into the country. And they're doing that by not buying any soybeans. I think they were about 12 to $15 billion worth of soybeans. And now they have been really since the beginning slow walking these, rare earth metals. And so they require now all of the companies that make rare earth metals to kind of register. They essentially have to get approval for what they can send where. Again, they're just trying to keep a tether on, I think, one of the most important components of manufacturing, especially in today's world. So what you end up here with is a situation where Trump is supposed to be meeting with the prime minister from China a couple of weeks from now, and he also said in the same tweet, besides the fact that we might have some much bigger tariffs, that he didn't see any real need to meet with him in that couple of weeks. So, that's just a deterioration of the situation. The market's going to respond to that. But again, the market has been moving up based on the fact that they feel, again, in my opinion, that Trump will back off when he needs to. So, we'll see. This is the risk of these tariff wars. I mean, you get these situations where theoretically people could raise tariffs on you. That hasn't happened so much. What has happened is they boycotted American products, essentially. So Canada isn't buying, Kentucky bourbon and those types of things. And so that's been, bringing down, I guess the commerce that's out there. Right now, the commerce is really building these data centers. If you look at the first half of this year, we were up 1.5%. in gross domestic product, which was still slower than last year. We were about 2.6% last year. And so we're kind of slowing down some. But if you take out the build out for data centers, according to this study, you'd only have 0.1% gross domestic product. So, the economy is soft outside of that. The whole stock market is riding on this build out of these data centers. I don't think this situation with China is going to be the thing that stops these companies from building out these data centers unless it becomes a bigger economic event. So, for example, in 2022, a lot of data centers were postponed just because the market was coming down, inflation was high, uncertainty was, there. And what I've read is that, although there's a projection for $4 trillion worth of money being spent on the building out of these data centers in the next 5 years, which is a tremendous amount of money, that's on a flexible basis. So these contracts are huge, but they're set up to kind of deal with this uncertainty situation. So they could stop some of that. If that happens, the stock market economy is probably going to have a real big problem. I don't see it happening just because of what's happening right at the moment, but it is something to watch for. It's the driving engine. I mean, so you got all of these different parachutes behind the train, so to speak, slowing down the train, but you have the engine going really strongly and pulling everything forward still. That's with these data center build out. So that's going to be the key issue altogether. We'll have to see how this plays out. I don't think that Trump has as high of a leverage point as he might think he does, and maybe I'm wrong as far as what he's feeling or thinking. Can't really tell for sure, but I do think that's going to be something where China is now starting to feel more confident. I think this brings into all kinds of plays. They've been getting their soybeans and beef now from South America. The farmers haven't had any orders since May in soybean area. Back in 2018, we had the same thing happen where they did tariffs and they stopped buying soybeans. And actually, the studies show that almost all of the money we gathered in tariffs from that time frame, and they weren't nearly as big as they are now, but they all went back to farmers in the way of subsidies. And they are working on a subsidy package right now for the farms to try to offset this soybean piece. 10 to 15 billion are the numbers that I've seen, kind of the farm aid bill type of thing. So we'll see what impact that has and see how that works out. But it's just part of this overall process. It's the same thing that we saw before. So we did add some gold to the portfolio for some of our accounts. That was up today. If that was up 1%. So that's kind of why you have these types of things for days like today, and some type of a hedge. We still have our T-bill pieces and what have you kind of sitting out there that we've been sitting on for a long time, waiting for some chance to buy. We might do a little bit of dip buying here next week. Kind of depends on how this plays out. You never know. Sometimes it just cascades, but I feel like the dip buyers are too strong here. They're not done yet. They're not out of money. They're not, afraid enough yet. And every time we have these types of drops, we seem to get these kind of big rallies that come back. And I wouldn't be surprised if it isn't next week, even if it's not Monday for that matter. But maybe this is big enough. It'll take a little bit longer, a little bit more resolution, because, you throw out these threats, you're a ways away from getting some type of resolution. The market still might come back up some just based on the concept that Trump, might be able to guide us through this, situation as far as that goes. And I'm obviously a little bit worried about the ability to guide us through, no matter who it is, no matter what you think about them. When you're talking about the global economy, it's so dynamic. Something can fall apart someplace because of the pressure that we're putting, on the system with all of these tariffs. And you might not be able to pull them back fast enough because the damage has already started to kind of cascade. So that's why we've kept this, kind of essentially 1/3. We're down to about 25% now outside the market of our normal allocation into stocks. And so, we're ready for some dip buying ourselves with these T-bills that were all up today also, by the way. So nonetheless, that's what's going on today. Very fascinating time frame for the markets, kind of see what's going on as far as that goes, and look forward to being able to see what's going to happen next week. And we'll continue, these videos then too, to see, how this plays out. It could be quite interesting. So nonetheless, look forward to seeing you next week. Thank you very much.